This is Alan Bush with ADMIS. In the stock index futures, we did see some new contract highs in the December S&P this morning. This after the third quarter GDP coming in stronger than expected, up 3.9% against the guess of up 3.3%. However, some pressure developing at 9 o'clock, that with the consumer confidence coming in with a very big miss to the downside. And yet futures at the current time now are basically just steady, maybe a little bit lower. I'm inclined to think that we will see a recovery from here and higher prices likely later today. I would have to say that this rather bearish consumer confidence report is being taken very well by the market. So the main trend still appears to be higher for stock index futures, still thinking that higher prices are likely through the rest of this year and well into next year. Over in the currencies, the dollar was higher due to the GDP report coming in quite a bit stronger. A little pressure more recently now with the very weak consumer confidence report. By the same token, most currencies were lower early for the same reason in recovering more recently. The one exception, though, is the Australian dollar, which remains lower. Substantial weakness earlier today taking place after the Reserve Bank of Australia very effectively and very forcefully attempting to talk down the value of the Australian dollar against other currencies. So it does appear that the position of the Reserve Bank of Australia is to weaken their currency. So it looks like lower prices are likely for the Australian dollar. Also the yen, a little bit better. Some positive comments from the finance minister in Japan. However, we feel that the main trend is still lower for the yen, especially as traders anticipate more accommodation coming from the Bank of Japan. So to summarize, looking for further weakness in the Australian dollar and also in the Japanese yen longer term. Over in the treasuries, seeing a little pressure with the GDP report coming in better. Of course, that's a bit bearish. And then some recovery gains, especially at the long end with the consumer confidence coming in very weak. Still thinking that the main trend is higher for the long end of the curve, especially the 30-year treasury bonds. And I believe this is a trend that will continue through this year and well into 2015. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.